couple good bars on 70, 71, no tail at the bottom of 71. I meant 71, 72, no tail at the top of 72. Possible bear reversal with 73, but I'm not shorting. You know, it's a one-tick breakout of the bar 8 high, and it's almost a little expanding triangle with 63, 67, and then 73. But to me, I think the odds are that you know, we're going to work higher. We may go up to 24.5, the high on the daily chart from last month. And then we got the good breakout on 74. I bought as the bar was forming, and I exited when 75 didn't have a strong close, and that was just a mistake, because a lot of times the rallies into the close trap traders out. You know, we had that yesterday as well. You know, so I just held yesterday, and today I mismanaged it. I should have held. I saw the soft close on 75, and I said, better get out. Anyway, it went above the target and bounced around here into the close, and I wouldn't be trading any of that. Let me take a look at questions. Okay, I thought that the 720 bar on the bonds was a high probability signal, primarily because the signal bar, a small body in the direction of the reversal, no tail on top, relatively long tail on the bottom, kind I've observed to work in a high percentage of time. Okay, yes, it worked this time, but what are your thoughts on this type of setup? Okay, without even looking, I know what he's talking about. Right here, yeah, I bought notes. I think I mentioned. Okay, let me read the question again. I thought that the 720 bar on the bonds was a high probability signal, primarily because of the signal bar. What are your thoughts about taking this kind of a trade? Yeah, to me, I bought notes instead of bonds, but to me it's a one-bar final flag. You have a huge spike up. You can argue it's two legs down. It's a spike and channel down. It's a spike and climax down. I thought the odds were very good that the market would have two legs up, and you know, I personally bought it, but I bought it on the notes and not the bonds. And I mentioned that I even bought it early. I bought it on the 1 minute chart, and I just exited with 4:30 seconds. So I thought on this trade, in my mind, I was trying to tell myself that it's a little wedge bull flag with 3 pushes down. You know, there was a spike and a channel, and then a climax, and then an II final flag for a scalp. The extent of the sell-off. You know, the sell-off retraced almost the entire pattern. You know, tested the breakout, but it retraced so much of the initial breakout that you know, I was concerned that there was too much weakness there, and because the notes only retraced about half, I thought that was stronger. But yeah, I take those trades all the time in bonds or notes. I tend to trade notes much more than bonds. Okay, let me go back over here. Al, you have a little bearish bias early due to the bar 8-9. Do you ignore the bullishness in the last 2 days? Thanks. No, I don't. You know, I kept that in mind the whole time, and that's part of the reason why, as this channel started grinding up, that I thought that the market was going to break to the upside. However, you know, when you get 2 strong days, you also can start arguing the other side that, okay, you had 2 really big days. It's kind of climactic. The market might correct, you know, for a day or 2. But you know, you're right. I did pay attention to the reality that the market was up big for 2 days, and I was very much aware of 1224.5. You know, for the for yesterday and today. But in terms of day trading, you know, to me that's, you know, what happened yesterday and the day before, to me, is a small component of the trading that I did today. As the day went on, you know, 10 o'clock, 11 o'clock, I thought, you know, I said a couple times I thought there was a 90% chance that we were going to break out, and you know, by 10 o'clock or 11 o'clock, I thought the odds were 60% that it would break to the upside. And then when we started getting, you know, later in the day, you know, after 12 o'clock, I thought the odds were probably like 70% that we'd have an upside breakout. And then when the bears failed to reverse the market at 67, I thought the odds were really good that we were going to have an upside breakout. However, you know, it's something I do pay attention to the strength of the past couple of days, but it's a very small component of my trading. I would say that on any decision, that may be 5%, and 95% is what is happening in front of me. Yesterday, you said near the close that you were interested in buying puts if you could because you believe the futures may be down around 4 points by the time the report came out. What was your reasoning for that belief, which turned out to be the case, and how did you arrive at 4 points and not some other number? Okay, that's interesting. The reason, in my mind, I think in the E-mini I think of 1 point, 2 point, 4 point, 10 point. That's how I think of every move, and and I know it's wrong, and it's too simplistic, but that's how I think of the E-mini. In terms of taking profits, I take profits at 1 point, 2 point, 4 points, and 10 points. And so if I think the market is going down, I'm thinking it's going to go down one of those 4 levels. Okay, I thought 1 point was obvious. It was obviously, I thought the odds were huge that it was going to go down 1 point. I thought 2 points was pretty easy since it closed up. It went up 2 points after the spider closed, and I thought it could test down into the tight trading range. So I picked 4 points. I didn't pick 10 points. The Globex may have gone down 10 points. I didn't even think about that on the report. I think it may have. So let me see. Well, it went down to 12.13. So yeah, the Globex went exactly 10 points down from yesterday's close. So that has to make you think that the quants are kind of thinking in the same way that I'm thinking. More accurately, I'm trying to think of things the way they think of things, and I just see 1 point, 2 point, 4 point, and 10 point moves happen too often, so it makes me believe that a lot of the big money is using those numbers. So if they're using those numbers, I'm going to use those numbers. So, but that was just my thought that it looked like it was going to be more than a 1 or a 2 point move. So the next step in my ladder is 4 points. So that's why I said 4. Okay, going into, let me put up the day session again. Daily chart, possible double top. I know it seems impossible to be a double top, when we've had 4 strong up days like that, but it's possible, and probably 50-50 chance that it's a double top, 50-50 chance that the market breaks out and gets a measured move up. This looks like it could very well be a trading range. Weekly chart, looks like a cup and handle. Here's the cup, here's the handle. So that's a breakout setup. I call that a breakout pullback. On TV they call it a cup and handle. Monthly chart, looks like we're trying to break out and hold above that swing high, and then next target would be the longs above this month, and then the target after that would be the longs above here. Monthly chart, I still think it's a bear rally. Weekly chart looks like a bear rally and a double top bear flag. Daily chart looks like a bull trend, but this wedge bull flag may end up being a final flag, and this may end up being a double top. I need more information. I'm certainly not going to be shorting just yet, but if we go sideways here 3 or 4 days and have a couple attempts down, I may buy puts on the second attempt down. Okay, I'm trying to see anything else on the daily chart. Daily chart, we've got a possible measuring gap in here. We've got a breakout above the highs, and we have a pullback over here, so this is potentially a measuring gap. So the middle of that gap area, so somewhere in here, it would project out. All right, hope everybody has a good weekend.